Great. Good afternoon, everyone. My name is Harrison Long, and I'm very privileged to serve as the moderator for today's panel, Massive Tech Upgrade, How Does It Help PE? And we're very happy today to have a number of esteemed speakers today to talk about this topic across real estate, consumer, as well as the technology industries. Before we begin, why don't I do a quick introduction of myself, and I'll allow the panelists to do the same. Second is we'll move on to do panelist chat and fireside chat on this particular topic, both at the GP level, how they look at technology and leverage technology internally within their firm operations, as well as with their LPs. Secondly is with the portfolio and the portfolio operations. And then lastly, in the remaining 5-10 minutes, we'll be more than happy to open up the floor for any open questions that you may have. Before we begin, let me do a quick intro. My name is Harrison Leung. I am a partner for Sears Capital based here in New York. We're a tech and telecom private equity firm with about $6 billion in AUM. I lead overall portfolio value creation and work and partner closely with our management team in driving portfolio initiatives, both tech and non-tech. Prior to PE, I spent about a decade and a half in management consulting, both at Accenture as well as McKinsey, being a partner in their tech, telecom, and digital practices. And then I started my career in the technology operating roles in the Canadian telecom industry. Next, why don't we have Sarah do a quick intro of yourself?
Hi, everyone. I'm Sarah Enslin. I'm a principal at Yellowwood Partners. We are a consumer-focused private equity firm. So I spent all my time investing in branded consumer products and have spent the past decade of my career working with consumer products and consumer internet businesses. Excited to be here. Thank you.
Great. Cale, did you want to go next?
Sure. Hello, everybody. My name is Cale. I'm the CRO at Altvia. And just, I guess, to make the Altvia intro most relevant, it's kind of interesting for those who read Dan Primick's Axios Pro Rata. But earlier this week, he basically dropped 5 data points on kind of the state of the category and how competitive things are. And so far this year, all-time records in VC dollars invested, VC-backed exits, IPOs, buyout activity, global M&A, and for the first time, the number of private capital firms surpassed hedge funds. So definitely an increasingly competitive time, and of 100 GPs and scoring themselves 1 out of 5 for tech competence. I think 40% said they were a 3 out of 5, and then appetite for technology, that the vast majority gave themselves a 5 out of 5. So kind of an interesting time in terms of finding new levers to pull as it relates to technology. And Altvia, we're a tech platform built purely for private equity and venture capital, and we're really purposed towards the firm life cycle. So think raising capital, deploying capital, monitoring portfolios, reporting out on that awesome performance to your LPs right in time for the next fundraise. So tactically, for the more tech savvy folks, our platform looks like a CRM, business intelligence tool, and then an LP portal or a data room kind of under the same roof. I've been in SaaS go-to-market for 10 years. I've always worked closely with the venture community. I was an independent consultant for a long time where they would install me post-Series A to kind of build a repeatable sales motion. Grew up in Denver, spent 10 years in New York, got my MBA at NYU. I'll leave it at that.
Great, thanks, Cale. And speaking of tech savvy, why don't we turn it over to Jacek, our CTO on the panel.
Hey guys, Jacek Materna. CTO at Aspen Capital. We're private equity and real estate, commercial, residential. My background is, I've been building software businesses for almost 20 years. So excited to be here.
Thanks for that, Jacek. Well, first question, why don't we start with this? Given the fact that, many of us are either still working at home or just slowly opening up due to the pandemic, why don't you share with our attendees today sort of how did the pandemic actually contribute or impact in terms of a tech or digital acceleration in your respective role industry? And that could be, again, right, at the GP level, with the LPs, or even with the portfolios. Let this be an open conversation. Maybe, Cale, you can, hit it away.
Yeah, so I think what's most like the first question is, are we going totally back to normal, and what's the timeline look for that? And a lot of the GPs that we've worked with actually polled their LPs and asked what the preference would be, if we want to use annual meetings as a good proxy for that. And this is going to be very useful, but every single survey that they sent out was 50-50 split right down the middle. So I think we can assume that hybrid is probably going to be the new normal. And a lot of groups are kind of scaling down the IRL or the real-time kind of physical interaction of their annual meeting and kind of indexing that spend towards a higher production value for something that's more digitally native. Outside of that, some of the other interesting things that we're hearing is of using less of a let's pull all this content together, and again, kind of the annual meeting is the headline, and do like a 5 to 8 hour really day-long intensive, and let's think more about how we could kind of sequence or drip content on the LPs leading up to the session to support comprehension, but also as a useful feedback loop to understand, okay, what are the LPs really engaging with in the stuff that we're dripping out, to then kind of course correct when you get to the annual meeting and make sure that you're showing the most relevant content. So a few thoughts, but I'll better pass the mic.
Sarah, Jacek, any thoughts from your side, whether it's at the GP level or the portfolios?
Yeah, I mean, it's really been amazing just overnight having to really integrate technology much more into our process. And so I think it's really increased efficiency in so many different ways. I mean, there's so many meetings that, we've had to do by necessity over Zoom, but it's increased efficiency. It's allowed us to connect with more people more frequently, where there were higher barriers to do so, previously. It's also added, I think, an additional layer of personalization to conversations that previously happened over the phone. Like now it's over Zoom, and so you do get more of an interpersonal connection as you can see folks' faces. And so, I think it will be interesting and is interesting as we go back to doing things in real life, because there is no replacement for an in-person meeting, but adding the technology to enable and leave some of the efficiency that we've gained, but also adding the in-person element to gain some of the relational aspects as well.
Yeah, and I'll just add, those are, I think, very similar threads on our side, and I think operationally, I think most businesses out there have realize that they can get a lot of effective operational work or just deal flow work done using technology tools. So I think we underestimated how clever people are in the businesses, investors, et cetera. And so it's to me, it's like a one directional arrow where, there's a little bit of a new normal. And then I think it's going to start bleeding into, okay, what about, other parts of the business, whether it's portfolio, and saying, hey, how do we leverage more technology faster? So I think anything that's been on the roadmap, or like this is a 3-5 year thing, maybe it's a 1 to 2 year thing. So culturally, I think that's a big step. And, that keeps me real busy. Technology is at the center of a lot of moves and changes. So really exciting.
And I guess one comment too, I guess, just to play into that, is we're seeing, I guess, both on the fundraising and the capital deployment side, that folks are being more strategic about what type of interactions they're having based on where those things are in the pipeline. So a lot like first dates, I guess, if we just want to generalize that way, is indexing hard towards digital and virtual, which is allowing a lot more efficiency and a lot more kind of reps at the top, especially for LPs, where they can kind of quickly interview GPs, and then as they work further into the pipeline, then they'll execute those kind of on-site in-person meetings when both parties are excited about each other.
Thanks, Kale. There was a couple of sort of common themes of what you all said. And one word that really struck me, Sarah, was when you used the word necessity. Maybe I'll open up again back to the panel here. How much of the technology used in your mind, it is really about whether, again, the GP and the firms sort of surviving because everyone had to work from home, and then how much is it sort of leveraging the technology as a true competitive advantage for them to, maybe, Jacek, back to your point, accelerate things that they were already doing, or serving as a competitive advantage for them to differentiate between either other GPs or sort of, if it's at the portfolio level, against their sort of competitors in their respective spaces?
Yeah, I would say it's both. Out of necessity, but it's also really evolved into a competitive advantage. And I think we use technology in different ways to serve both purposes. So I think, video chat was something that, we used much more out of necessity. and it's become a really kind of integral part of our way of working. On the other hand, like we use technology in the form of data as a competitive advantage. So we use a lot of data internally to look at and monitor new and emerging consumer brands, and that's something that we've always done as a firm. It's always been a competitive advantage for us, but we've only accelerated our use of data in the recent past to continue to capitalize on that competitive advantage.
Yeah, I'd say where it fits in on our side, or what I've at least seen talking to folks, specifically around private equity, there's been a little bit of a macro shift on private equity. I think has kind of gone through some transformations around how it looks at technology. There's an operational piece, and I think more and more it's moving to be a strategic lever. And just the fact that the entire operation and operations had to run over Zoom, and there wasn't a lot of travel. Companies had to figure out how to continue to operate. I think the culture of just looking at technology has changed to the point where there's much more appetite to leverage, for example, third-party partners to bring things to the firm or to the portfolio company that may not have been in play before. Meaning, typically it might have been an internal conversation, or hey, let's not leverage a third party. But I think there's just a culture now of saying, hey, let's surround the firm or the portfolio company with best-in-class partners, because they can get us to market quicker, whether it's for data analytics, whether it's for some of these pieces. There is obviously a core piece that's going to be usually part of what the firm wants to keep in-house. But I think just the culture of using, SaaS partners and technology providers has definitely ratcheted up just through, hey, we're running the whole business on Zoom. They're a partner, a critical partner of that being. And so I think that's been really interesting to watch.
Yeah, and I would totally agree. I think I've probably spoken to maybe 500 GPs over the last calendar year, and I would say, probably 80%, if you ask them what their differentiation is, it's something revolved around, we're a smart bunch, we're well connected, we're credentialed, we have a good track record, right? So there's not much differentiation in that, and there's kind of two very distinct cohorts that are developing. You have kind of the traditional status quo cohort, which would identify tech as like IT, right? So things like operational systems, right? So Zoom, something as simple as that, or hey, we need a way to keep a handle on our actions that we have with them, something like that. And then you have groups which are thinking about technology as a point of differentiation. And usually, to Sarah's point, and Jessica as well, right, that's usually rooted in data. So 1.0 is we have our data in one place. 2.0 is we use visualizations to quickly interpret the data. And then 3.0 is, you start to use predictive algorithms, scraping private company data, stuff like that, where you start to get, kind of asymmetric access to information, which gives you insights, which can give you speed on the fundraising and on the deal side. But distinctly two groups and not a lot of gray. It's either, yes, we have computers that are connected to the internet, versus we're doing extraordinarily progressive stuff on the tech side, and we're totally bought in that this is going to be the secret sauce for us.
Very interesting, Cale. Well, since the three of you all talked about data, why don't we go a little bit lower, right, and more detailed? But before we do that, I just want to share with the audience that if you have any specific questions or Q&A, please do enter into the chat, and then we'll be sure to cover it towards the tail end of our discussion. In terms of data, and we can sort of go around in different ways, right? One is sort of the notion on, data management, data governance, reporting, analytics, or the other angle is based on sort of each of the either industry or sub industries that you will all work in, right? Because I think, Sarah, you mentioned using data to really, I would say, go through the sourcing process, right? Identify new and emerging brands. Maybe you can talk a little bit about, the different data sets and how does that differentiate between some of your competitors. I know, Jasik, you're sort of in the real estate space, right? So again, maybe share with us a little bit, one or two levels down, either at the industry level or some of these other data subcategories in terms of where and how you're really putting data to use.
Yeah, so on the consumer side, we're lucky that the industry really runs and lives on data. And so, there's a bunch of different sources that we use and we look at, but it ranges everything from, cash register data, so what people are buying at the store, to doing consumer surveys, to scraping social media and looking at data from there, consumer panels. So there's really a wealth of consumer data that we use to surface and find new and emerging brands on the sourcing side, and then on the investment side to look at those brands from a competitive standpoint against their peers and draw trends from that. So lots of good data on the consumer side.
Yeah, and I think I guess that kind of answer that question, Harrison, would be we invest heavily in infrastructure and software, right? I mean, we've got 30 plus professionals in software engineering, data science. So I mean, it's more of a fintech software business within parts of Aspen than it is just a couple of analysts or some people, like you said, Cale was saying, around computers connected to networks. So we're really building out, data platforms and to really harness, look, we need to know where we need to buy commercial real estate, and we need to know prices we want to pay for residential assets. And so there is an incredible amount of data out there. And I think, putting it, as he was explaining, 1.0, 2.0, 3.0, even a 4.0, that's such a force multiplier, because like I said, that's going to be the differentiator between, I think, successful long-term value generation, buying assets and holding them over a long period of time. And just, like I said, really, really digging into how we can tap into, all of the sophisticated pieces on that 3.0 piece that Cale mentioned, to really get ahead of the competition, right? And I think that's why I'm here, and kind of that's what we're doing. And I think we're going to be leading that piece. So it's definitely all around data, and there's a lot of code, and there's a lot of infrastructure to write. So it's not just those computers connected to the network, so to speak. So
yeah, and I guess if you kind of think about a lot of what Sarah was saying in terms of like there's this geometrically exploding world of data that's out there, and so if you can kind of understand what's the most relevant and useful in your world to it and create some asymmetry that way, that's very exciting. A lot of things that we see GPs though is that arguably the most proprietary data that they have, or the most opaque data in the world, is relative to private companies, right? So a lot of the GPs that we're working with, it's like, okay, how are you drawing insights out of your portfolio in terms of, right, if you want to buy an apartment, what's the best way to understand that apartment? It's like, oh, by the way, you own 15 apartments that look and feel just like it. So if you need to, develop some comparables or something like that, like let's really get granular with the data that you have, purely that only you, unless there's other shareholders in the private company. But how do you take it a level deeper in terms of understanding not just the kind of base case surface level attributes, like, hey, we invest in software companies between 5 and 10 million ARR that have these type of growth rates. But if you really start to get deeper analytically, you can understand, okay, that have concentration of competitive sets that look like this, or who have shown retention figures over X, Y, and Z. You can get much more granular just by starting with the data that they have proprietarily, coming from the financial and performance metrics from the portfolio. So that can sometimes be an easier way to start, because you don't need to be as kind of skilled from a data science perspective or some of the other much more progressive technologies. It's more about just getting the data from your CFOs, I guess. If it's private companies, is like the first challenge, and then the second is making sense of it, and then you can wow, okay, this is the real outperformer, and then that informs all kinds of stuff. That's an objective, data-driven story for your LPs. And then also when you go to market from an origination perspective, you can be much more specific in the companies that you think are going to outperform, because you're leveraging what you uniquely are able to kind of perceive and understand.
No, this is thanks for sharing, Cale. I think I really like how you framed the maturity journey of data 1.0 to 3.0 and 4.0. I think Jacek, you were mentioning. Now, I guess on the flip side, right, how I look at data is very much like Spider-Man. With great power comes great responsibility as well, right? There's also a number of challenges and in some cases issues relating to having all this data. How does your firm or your role, your function sort of overcome that? And I'm talking about things like, overcoming potential biases, right? Because in many cases, data is based on, historical, situations and trends, whether it's sort of, cybersecurity, right? Now that everyone's working from home, I think Sarah, you mentioned that. there are much more endpoints out there, and we're talking about every single device, every single laptop, every single IoT, module, right? To even regulations like GDPR, PII, and things like that. So we'd love to hear from again, each of your subsectors or industry. How do you sort of balance leveraging all these abundance of nuggets out there, but also sort of, adhering to some of these other challenges that might be in place too?
I can jump in there, I guess. And this will be the only shameless thing I mention, promise. And Spider-Man's my favorite superhero, by the way. But I guess for us too, because data security is like one of these things where it's kind of commoditized in enterprise software, but it's mission critical, right? And so nothing would be more devastating, all of your LPs and their bank account numbers, right? So in this category, perhaps more than any, the data piece is very sensitive. So our platform, it's just work with the best in breed when it comes to cybersecurity. So our platform is built on Force.com, or Salesforce is our backend. So we just outsource that, right? Because it's diminishing returns in terms of like innovating in the category. We don't want to innovate in data security. We work with the best that way, and then we can pile in on things that are a little bit more purpose built for the category. And then I would say the only other time that we see is like PII is pretty straightforward. GDPR, as you mentioned, can create issues. But I think with GDPR, and kind of immediately, all right, what geographically are we exposed to? Our LPs or our portcos mostly domestic? Are they North American? If you start to get more of a global footprint, definitely get your arms around GDPR, because that gets interesting. And then PII, you just need to be careful in terms of how you market. If you have kind of more of a true outbound marketing motion, whether you're raising capital or putting the firm on the radar of private companies, that make sure that you're honoring kind of opt-out and that you're handling those lists carefully. But I think data security, I would start there and then outsource it to the best, and don't worry about it, because if it goes wrong, it's the worst. But if it goes right, there's no high fives.
Yeah, I think it's for me, get on the operations side, but sort of being responsible for the data security and all those pieces. I mean, I think it just requires investment. So you're going to be investing in really good vendor partners. So I think the vendor selection process is extremely critical. So you want to sort of marry up with people that are both investing in this space or in these areas, and have that same level of urgency as your potential firm, right? So vendor selection is key, because I think more and more companies are starting to realize that, there's diminishing returns in keeping these shims in-house. So let's leverage, the best of the best. And so I think that vendor relationship is key. But at the same time, I think you just need, again, investment on pieces inside the business or businesses around managing technology risk. And just, I think if you are 3.0 or building out pieces that leverage software, and your companies are building out, proprietary systems, then I think it's just make sure we invest in actually having, security professionals and all the good things that you would need to make sure that everything is, locked down pretty tight. So I think part of that is just, like I said, investing. So it's not just a sort of a fifth thing on the P&L. It's somewhere there on the top, and I think that's board level down kind of conversation. So
Great, Sarah. Any thoughts from your side?
Yeah, I would just add that I think one of the challenges with all the data is sometimes you can get lost in it. And so I think it's important and a challenge for us as we think about companies to invest in is really like to focus on the interpretation of that data, and to understand what patterns you can recognize from it that might suggest that a company is in a promising position. And I think that's the differentiator with how we use some of the data that's publicly available is just our ability to interpret it and understand the why and connect all the different data points to become a story versus getting lost in it.
No, thanks, Sarah. It's because there are so much data. Worse is not just the interpretation of it, but in some cases the data is actually competing against each other, and they actually different insights. So it's really understanding, to your point, how do you think about it? Which part is actually correct, and how do you interpret it, right? The next question I have for you all, which I think popped up a little bit, but I just want to drill down, a little bit as well. I think, Cale, you mentioned about, outsourcing some of the, cybersecurity aspects of the platform. I think JSIC, you also mentioned that, right? You framed it a slightly different way. I think you were more of a finding the right partners, right? Maybe talk to us a little bit about, do you think that this will be a continued trend? How, from a technology or tech stack perspective, that open ecosystem would continue? And as such, how do then, these integration points will take place? It sounds like it's going to be more of a, partnering instead of a self-build type of a model, right? And then I think lastly, how do you then sort of counterbalance? Because I think if you look at it from a traditional IT or old IT perspective, people as IT because of scale and cost reasons and whatnot. How do you think about all this just from a best of breed type perspective?
Yeah, I mean, I think it's going to be part, again, if you look at the financial industry, I think what's going on with the banking sector, there's a lot of push towards open banking. I mean, Europe's been leading the charge. The US has a lot of pieces moving into place. So I think at the center of it is really interesting because you've got this massive amount of disintermediation going on in financial services, huge amount of, companies coming into the space all over the place. And then you've got, the financial industry, and there's all the subcategories within that, but I'll just use finance as a broad term. And so I think what's interesting is that those two worlds are sort of colliding, and you've got, like I said, more and more movement towards, that partnership. So, companies are starting to become very comfortable with moving all of their, compute data and pieces to Amazon Web Services. Some companies are actually going in the reverse direction, which maybe is very specialized. Maybe they're trying to look at it at doing something a little bit differently. But I think generally speaking, like I said, there's an appetite to leverage more partners. And, just like, any good SaaS business, that uses 50 other SaaS services to run their operations, I think there's a little bit of that going on inside private equity where, what are we good at? What do we need to own? What do we need to have on the balance sheet for, 10 plus years? And then how do we take, the best in breed and plug them in, but do it obviously really securely and make sure you invest to keep up with that. So, like I said, I think it's really exciting because it's to me going to make things move faster, and you're going to just ultimately get better results all the way up to the LPs because you're going to have companies that are pushing the envelope on trying to break out and like I said, get those returns and all those pieces in place for either the portfolio companies or just like the LPs in general. So.
Yeah, for sure. I think we're out of time, so I'll just throw out like a couple of thoughts. So I would say there are very few JASICs in private capital markets, and the same can be said for Sarah. So a lot of times, I would say if you need to establish some type of owner or point of accountability when it comes to technology strategy, or bring in a fractional CTO or something of that nature, because that'll preempt all the downstream issues that come around data strategy, integrations, APIs, data pipelines, data warehousing, where you start to run into all those issues. So the sooner you can establish somebody as kind of a point of accountability within the firm, and then as JASIC had mentioned, kind of come to terms with where your aptitude and competence starts and stops as a firm, then bring in partners to kind of guide and direct that. Because when that doesn't happen, we see a lot of times, and depending on the actual scale of the firm, but we'll see teams kind of make purchasing decisions that just only impact their world. So deal teams want something for a pipeline, IR wants something for a portal, everybody kind of wants visibility into the portfolio. You've got a fund admin doing the accounting, and that very quickly gets unwieldy. And if there's no vision to kind of understand a tech stack for the firm, it's very unlikely that you can, manage and maintain APIs and build data pipelines. The sooner you bring in somebody who can kind of establish not only an immediate term course, but something that's not going to hurt you in the midterm, then that usually preempts a lot of the conversation around like, where is our data stored? Is it secure? And then is SOC 2 compliant, right? That's where all that kind of stuff comes. But I'll leave it at
that. Sarah, any final words from your side?
No, I think I second everything that's been said on this one. So thank you.
And perfect. Thank you, everyone, again. We're at time. So I want to once again thank our esteemed group of panelists, JSIC, Sarah, and Cale, and all of you for joining today. Have a great day.
Thank you, Harrison. Thank you, everyone.
Thanks, guys. Bye.
Cheers.